Welcome back to our crypto market update. Today we're breaking down the latest movements shaping the landscape for Bitcoin, Ethereum, Solana, and the broader digital asset space. Let's dive in. Recent market action has seen Bitcoin price soften, trading lower over the past 24 hours as volatility grips the space. Bitcoin was last reported down by about 3%. Hovering in the mid-$80,000 range. This dip followed a bout of weekend volatility and thin liquidity across exchanges. Meanwhile, Ethereum also faced downward pressure, with ETH trading lower amid mixed sentiment in the altcoin market. Similar to Bitcoin, weakening momentum and cautious positioning saw Ethereum lose some ground in its price action. Solana and other altcoins have mirrored this trend, with prices moving lower in step with the broader market. Solana's price has slipped modestly, reflecting how even higher growth networks can be affected by short-term market sentiment. Looking deeper at market indicators, futures open interest shows an interesting picture. Bitcoin's open interest has slightly risen, hinting at continued accumulation despite price weakness. Meanwhile, Ethereum's open interest has seen a mild dip, suggesting some caution among traders when it comes to leveraged exposure. Among notable developments, institutional activity remains significant. Strategy Inc., a major institutional holder, announced it has purchased over 10,000 additional Bitcoin, reinforcing a long-term confidence from some large investors even as prices pull back. Another key story comes from the traditional finance world. JP Morgan has launched a tokenized money market fund on the Ethereum blockchain. This marks one of the latest steps in blending established financial products with blockchain technology, offering new avenues for institutional and professional investors to participate in digital asset markets. We also saw new trading features from major exchanges, with platforms like BitGet unveiling TradFi access that bridges crypto with traditional asset classes using stablecoins for settlement. As we wrap up, the overall sentiment across markets remains cautious, but engaged prices may be soft in the short term. But institutional interest, innovative products, and strategic buying suggest the foundation for future growth is still being shaped. Stay tuned for our next update as we continue to track key trends in the crypto space. In the past week, institutional demand for the crypto market has once again demonstrated strength, attracting the attention of global investors. The latest data shows that from December 8th to 12th, spot-based crypto ETFs for Bitcoin and Solana recorded a total inflow of $530 million United States dollars. This strongly indicates that institutions continue to maintain their interest in these key digital assets. Despite market volatility, Bitcoin led the way with the largest inflows, recording approximately $287 million United States dollars in just those 5 days. This figure not only demonstrates continued strong interest, but also places total assets managed by Bitcoin ETFs at a record level of approximately $118 billion, nearly 7% of Bitcoin's total market capitalization. Meanwhile, Ethereum also performed strongly, with its ETFs recording net inflows of approximately $209 million United States dollars. This reflects investor confidence in Ethereum as a key layer in the smart contract and decentralized application ecosystem. Despite the fluctuations in the price of ETH, institutional investors appear to be gradually building their positions through listed ETH. Equally interesting is Solana, despite having smaller inflows than its two older siblings, still recorded approximately $33.6 million United States dollars in inflows to its ETH. Notably, during this period, none of the 7 Solana ETFs recorded a net outflow. This indicates that institutional investors are now diversifying beyond Bitcoin and Ethereum, but also into promising alternative assets like Solana. Overall, these figures indicate that even as prices move sideways and market sentiment remains cautious, institutional demand remains active and sustained. Large investors appear to be moving beyond short-term trading, but are instead building long-term allocations through regulated Therefore, this inflow trend could be an important indicator that the crypto asset class is gaining acceptance among professional investors, positioning Bitcoin, Ethereum, and Solana not merely as speculative buzzwords, but as part of a more serious investment strategy. Solana captured 26.79% of global interest in blockchain-specific narratives in 2025, according to the latest CoinGecko report, making it the most popular blockchain ecosystem for the second consecutive year. This means that out of more than 60 active blockchain ecosystems studied, 1 out of every 4 narrative interactions online was about Solana. The study measured non-bot global web traffic throughout the year, reflecting real investor curiosity and engagement. Despite holding the top spot, Solana's share of attention declined from about 38.79% in 2024 to 26.79% in 2025. This drop signals increased competition for attention. As other ecosystems grow and diversify, right behind the base ecosystem ranked second with nearly 13.94% mined, while Ethereum claimed third place at 13.43% global interest. Both ecosystems have maintained solid footing, even as narrative focus continues to shift across the crypto space. Emerging blockchains also made notable gains. Sui expanded significantly, capturing 11.77% of investor interest, while BNB Chain grew to about 9.05%, boosted in part by the launch of high-volume trading features on Binance's platforms. Other projects such as XRP Ledger, Beat, and Hyperliquid entered the top 10 most followed ecosystems, reflecting broader diversification in what investors are exploring beyond the established players. The report also highlighted how Solana's narrative has shifted. While it still leads in ecosystem popularity, it faced challenges, expanding beyond a strong association with meme-driven activity, which may have limited broader narrative engagement this year. In fact, meme coins themselves captured a significant portion of global narrative interest, showing that community and speculative trends still play a major role in how people discover and engage with crypto. This environment of increased competition and narrative diversification suggests that the crypto landscape is maturing. More ecosystems are gaining attention, not just for price movements, but for actual technological innovation, community activity, and real use case development. If you're tracking blockchain trends for investment or research, this kind of narrative data can be a powerful indicator of where attention and potentially future growth is heading. Want deeper insights into how these ecosystems compare for 2026 and beyond? Hit like if this video helped you, share it with a friend, and don't forget to subscribe for weekly blockchain deep dives. Thanks for watching. Stay tuned for more updates on the evolving world of crypto.